You are listening to chartingwealth.com's comprehensive review and forecast for the week beginning Monday, the 16th of October, 2017. Well, guess what we are posting on this broadcast? We are sending to all of our subscribers, it'll be in your email, the link to the online free training that we have, along with a link to the chart that we have created for following and tracking and charting Bitcoin. For those of you who are interested, we prepared this a couple of months ago and it received rave reviews from all of you. Didn't have a negative comment by anyone. If you are a subscriber, it will be attached. If you're not a subscriber, well, you need to be one. You need to go ahead and subscribe. We'll put this out again at a later date. But in order to get any of our training when it's first available, and of course probably the next couple of times that we offer it, you're going to need to be a subscriber. How do you do that? Well, you go to chartingwealth.com, put in your name, email address, and for free, priceless, you will receive our daily market reviews, our comprehensive review and forecast, all the charts that we have to offer, plus you'll be the first in line for the training when we put it out. So watch in your email. All subscribers will get that out to you along with this broadcast. If you're listening on YouTube, it will not be attached there. You will need to be a subscriber to get it. But we do appreciate all of our YouTube subscribers. Add to that, please, if you would, your subscription at chartingwealth.com. Now let's talk about these markets. Everything up again. We see that the S&P 500, the Nasdaq 100, the 20-year bonds actually, and the most up, gold up 0.77%. Let's jump right in. The least up is the S&P 500 going into the 7th week of up movement. Of course, we had the weekly vertical crossover back on the 29th of September, and it has just been continued strong up movement as we continue to see the derivative oscillator grow, the price percent oscillator continuing up at about the same angle. And again, a second full week above the Bollinger Bands. Those are the volatility bands as they continue to stretch out going up. Now let's go from the weekly chart to the 2-day chart. What do we see there? Well, it's interesting. We see things leveling out a little bit as we look at that 2-day chart. We see the high that was reached on the 2-day chart ending on the 10th of October. The high was 155.05. And of course, the 2-day chart, the first day of the latest 2-day chart ending on Friday the 13th, 155.27 was the high. So again, a little bit higher, but again, not a whole lot over the course of going on 5 days now. So, excuse me, we'll just continue to watch. Is the S&P 500 peaking out? Well, we don't know. When you look at the 2-day chart, it is losing some of that luster, not going up nearly as much once it sort of hit that top point around the 10th of October. So we'll continue to watch. Still, movement is above the 2-day trend line, but our trend line has been broken by the last candle. Again, it's not finished drawing yet, so we won't adjust the trend line just yet. Price movement did close above it, but the candle itself, the starting point, broke it. So we'll continue to watch. Just a little trepidation there. What's going on the 4-hour chart? Hey, it's crossed over going down. What does that mean? Well, for those of you who didn't jump in with that week crossing over, ending on Friday the 29th, that weekly vertical crossover, it wasn't a strong one as far as the chart went, although it did shoot up up until about the 5th of October, and then has sort of slid sideways since then and crossed over going down. Somewhere, it's a hard one to call. I'd say around the morning of the 11th of October. And again, is actually the price percent oscillators moving even lower. Derivative oscillator also gained some downward momentum. So if we have a good strong crossover going back up on that 4-hour chart at the beginning of the week, jump in and ride it, baby, because you got the 2-day and the weekly in confirmed up moves. All right, back to the weekly chart and to the Qs. The Qs is getting awfully close to crossing over. hasn't happened yet. Derivative oscillators crossed over. We did have an up day, 0.39% as compared to 0.11% with the S&P 500. Movement is above the Bollinger Band. And again, like we said, derivative oscillators in the positive. So looks like you could have a crossover over the course of the next week. Hasn't happened yet. What's going on that 2-day chart? Well, it crossed over going up back on the 6th. Of course, now we've got 1, 2, 3, 4, 5 going on 6. We're only the first half of the latest 2-day candle, but going on 6 candles up. I guess we call that 5.5. And we do continue to see strong movement up. But again, the topping out point, the high back on Tuesday the 10th was around 148.14 and around 148.51. So again, it's continuing to move up. Now let's look at the 4-hour chart, see where it is. The 4-hour chart, again, is sort of, as we look at the PPO, tracking along sideways. Derivative oscillator over the course of the day on Friday went into the negative. So again, a bit of trepidation there. Let's just continue to watch. We don't have a confirmed crossover. Hoping night might have occurred, so we could have fired that off to everyone that subscribes to the text service and all of you internationally who listen to this comprehensive review and forecast for that information. Since we can't text to you, we don't have it on the queue. So we'll continue to watch over the course of the next week and see what happens. We're not going to forecast because we're not forecasters, right? We are trend followers. Oh, by the way, how many of you have listened to the 4th chapter of the Charting Wealth book? Yes, we got it out eventually. It's finally come out. It's on time frames. Please listen to it. Let us know what you think. You can find it, of course, at our YouTube channel. And I'm not sure if we have not posted it yet at the website. We'll have to get that done. Please do go to the YouTube channel and subscribe, though, because we do put a lot of great stuff up there for you. Also, we try to track it on the website. But again, check both of them out. Be sure to subscribe to our YouTube channel. We would sure appreciate it. Same with Facebook, Instagram, and let's see, I guess that's it. YouTube, Facebook, Instagram. Okay, Twitter, yeah. So let's keep going. TLT, the 20-year bond fund, it was up 0.72% for the day. Continuing to rocket up. What do we see going on? Well, of course, we've got a confirmed down move since Friday the 29th on the bonds. And again, I'm sorry, I am on the 4-hour chart. Let's go to that weekly. You can see where it did cross over going down. Derivative oscillator, however, heated up over the course of the last week. What we see, however, is a spinning green top, which means lots of indecision. All of that up movement is encapsulated within the down candle from the prior week. So the derivative oscillators continued to heat up going down, but the price percent oscillator has pretty much gone flat, still tending a little down. So again, this means lots of indecision. Now, as we hone into this a little deeper, as we can do with the 2-day chart, we can see that it's broken the 2-day trend line and pushed above over the first day of the latest 2-day candle. It could retract from that, but pushed above the weekly also. So again, as we look at this, we can see derivative oscillators losing energy, and of course, we do see the price percent oscillator heading up. Hasn't crossed over yet, but again, it may be happening over the course of the next week. We shall wait and see what we see. Look at this 4-hour chart. Of course, we had a 4-hour crossover back in the afternoon on the 9th. And as we look at what has occurred, of course, the biggest bump up was in the morning on Friday, followed by more movement in the afternoon. Of course, we warned for anyone who was in a down trade when we saw that 4-hour chart cross over to consider pulling the plug. Of course, it then turned around and pushed through the 2-day chart and has now ended up at the end of the day pushing through the weekly chart. So if you weren't already out, you darn sure ought to be out now. Again, price penetration on these trend lines is important. It can be significant. We always pay attention to it. And we also pay attention as we go along. Remember, all the charts all the time, all the information all the time, the trend lines, the charts. And again, people are always like, well, how do you call when to get in, when to get out? That's why we tell you to practice every day, my friends. Every chart is a little different. Charts are different during certain times of the year, during certain seasons. When you're in a bull market, you're in a bear market. That's why we practice. That's why we keep our daily market reviews, our weekly market reviews. These are forms we have available to everybody who subscribes to chartingwealth.com. We fill those out every day. We have instructions on how to fill them out at the website. And we have those forms available for you for free. While you listen to the broadcast, you fill it out. So in other words, you spend the 10 minutes listening to this broadcast, being active by writing down what you're hearing and what you're seeing on the charts there. And then when you do a practice trade, you use the trade worksheet. So if you want to supercharge your training, if you want to get the most you can get from what we teach, this is how you do it. You keep those materials. Then you can turn back in time and see what you've learned. You can keep notes. You can get better. And there's something tactile about writing things down as you see them that is so very important. That's where we are on TLT. We'll go back to the weekly chart and we'll go to gold. Gold is up the most, 0.76%. Of course, what did we see happen in gold? We had a weekly vertical crossover going down in gold last Friday the 6th. But what happened? Well, we've seen it flatten out on the price percent oscillator. Derivative oscillator still gaining some energy. We have a green spinning top, green open box spinning top. All that movement within the candle, the down candle on the prior week ending the 6th. So very interesting as we tune into, we've seen this happen a couple of times on these charts, haven't we? Now we had the 2-day chart crossover going down back on the 20th of September. And of course things floated down. And then of course what did we see? Well, we saw the chart bottom out around the 6th and then start moving up on the 2-day candle on the 10th, the 12th, and then the first day of the latest 2-day candle on the 13th. So again, hasn't crossed over going up yet, but it sure appears to be getting close. We'll see what happens on Monday. But what's going on this 4-hour chart? We've told you that 4-hour chart. Again, why do we use the weekly and the 2-day chart on gold? Some of you ask. Well, when we have, because the 4-hour chart, as we say over and over again, on gold is just a total trading chart. It's amazing, particularly when you see what happened on the morning of Friday the 6th. You saw a crossover on both the Bollinger, on the price percent oscillator, and on the derivative oscillator. Both of them crossed at the same time. Means a much stronger crossing, even though you had down movements. The jumping in point, of course, would have been on Monday morning. I'm sorry, that happened on Friday morning, forgive me. Jumping in point Monday afternoon at 2 p.m. And of course, what does that mean? Well, of course, that means jumping in somewhere around the opening at 120.73, almost 121. Things as high at the end of the week as 123.86. So again, this 4-hour chart is amazing. Now, if you have both the weekly and the 2-day chart moving in the same direction as the 4-hour chart, well, of course, that gives you even a greater edge of safety and more that you can count on. But again, this 4-hour chart for some reason is so unique. And again, we get you guys raving, people who love to trade, who love to practice trading gold, who are very interested in learning how gold works. We hear you all the time raving about how incredible this 4-hour chart is. And I got to say, it really is. And we created our charts. We stumbled upon this. We tracked it, and we have found over and over and over and over again how incredibly accurate it is and how amazing. Now, it typically stops working at the end of the year around the 15th of December and then starts working around the 15th of January for some odd reason. Whenever the gold market does go flat, it'll act weird. We can see where it acted weird right around the middle of August. It acted a little bizarre and sort of got screwy. But when gold is really trending, the 4-hour chart, our 4-hour chart is just beautiful, just beautiful. And of course, the latest moves where gold started dumping on September the 11th and when it bottomed out around the 6th of October, just gorgeous, just absolutely gorgeous. So anyway, that's where we are as we end the week. Again, we encourage you, if you're not already a subscriber to chartingwealth.com, you darn sure need to be. We've been sharing so much good information with that quarterly chart training, with the most recent quarter ending and updating you on where that is, particularly if you're interested in being a long-term investor, and also with this Bitcoin chart that we created and the training we have there. We're very proud of all that, and we're proud of Chapter 4 that we knocked out yesterday and got uploaded to you. My friends, all the best from the whole team here at chartingwealth.com. If you need us, write us cw@chartingwealth.com. Take care. Hope you have had or are having a fabulous weekend. God bless.